Do you think you know how to get tax-free income from a life insurance policy? Well, by the end of this video, I'll give you all the facts so that you can learn how to do it the right way. Welcome back to Navigate Your Wealth. My name is Karen Stawicki. For the best advice on how to use both life insurance and annuities to create a successful retirement, subscribe to our channel and make sure you hit the notifications bell so that you can be notified every time we upload a new video. So how do you get tax-free income from a life insurance policy? Well, there are actually three ways, and we're going to talk about each one. Cash value life insurance policies do not have any reporting on the income buildup inside the policy called cash value, and you have access to get that money out. Most carriers, once there's cash value in there, will give you access to about 90% of that cash value. And as I said, there are three ways that you can get that out: the dumb way, the smart way, and the sad way. Let's talk about all three. The dumb way, I actually call the dumb way because even though you're allowed to do it, it isn't the best. And here's what it is. When you make your premium payment, a portion of that absolutely goes to the cost of insurance. But with a cash value life insurance policy, a bigger portion of that goes to the cash value buildup in that policy. And as I said, you have access to take that money out. Well, in the first way, if you take your premium dollars, you can do that because life insurance is one of the last financial vehicles that actually allows you first in, first out method of accounting, meaning your premium dollars in can be withdrawn before you have to share the earnings which have been tax deferred. Now, I call this the dumb way because unfortunately, even though you have access to it, if you take it that way, you can't put it back. All right, let's talk about the second way. The smarter way would be to do a policy loan. Same rules apply. If there's cash value buildup in that policy, you'd have access to about 90% of that. But if you take it as a loan, you actually have the ability to put it back. Have you heard the term bank on yourself or be your own bank? That's what they're talking about. You're actually borrowing and paying yourself back. And here's the best part. You can decide how you want to pay yourself back. Principal, interest, principal and interest, none at all, not yet, anything you want. If you die before you pay that loan back, they just subtract it from the death benefit and your family or beneficiaries gets the difference. The third way is the sad way. And I call it the sad way because you died. See, if you die, that might be the best rate of return on your premium dollars invested, but it's not the one we recommend. But even if you made one premium payment to that life insurance policy, if you die, 100% of that death benefit is going to your beneficiaries tax-free. So there you have it, the three ways that you can get money out of a policy. So how can I actually use the cash value buildup in a life insurance policy to create tax-free income for me in retirement? Well, if you start early enough making those premium payments, by the time you retire, the cash value in that policy could be pretty significant. And you could actually turn on a stream of income from that life insurance policy to take you through the end of your life. In fact, if that income is tax-free, it can offset your taxable income from, for example, a pension, if you're lucky enough to have a pension, or Social Security, or other investments from bonds or something else. So let's actually look at an example of how to apply that. Well, let's just assume for a moment that you're looking for $100,000 of level income. If all $100,000 comes out of a taxable vehicle, i.e. Social Security, your pension, your IRAs, or some other vehicle, then you're going to be in whatever tax bracket $100,000 of income lands you in. If, on the other hand, we split that up and plan now so that only half of that $100,000, $50,000 is coming from investments retirement accounts, or Social Security or pension, then that $50,000 will be taxable. But if we offset that with another $50,000 designed to come out of that life insurance policy or also a Roth IRA, then $50,000 is tax-free. So now, 50 and 50, you still have $100,000 worth of income, but if only half of that is taxable, half of any number is going to put you in a lower tax bracket than the whole of that number. $50,000 should land you in a lower bracket, but even if it doesn't, only half of it's taxable, giving you more money, more net spendable income to enjoy in retirement. Let us know if you've ever gotten tax-free income from a life insurance policy, or if you'd like to learn how to get tax-free income from a life insurance policy. Leave a note below. After this video, check out the next video called "What is the best type of life insurance?" to learn the smartest way to get tax-free income. The description is in the link below. You may be wondering why you can get tax-free income from a cash value life insurance policy. Well, you can actually thank the IRS for that one. Tax code 7702 is the reason. Let me back up a little bit and explain a couple of things. Did you know that your 401k was actually named by the IRS? That's right. Within the tax code, in Code 401, Section K, it talks about how companies can provide that feature, that vehicle for you to be able to save it. Well, a little deeper in the tax code is 7702, and it talks about the features and benefits of life insurance and how it can provide tax-free income to you. Now, they do have to pass two tests in order to qualify. One is the cash value accumulation test, also known as CVAT, and the other is the guideline premium test. If your policy does not qualify under one or the other, then unfortunately the income would be taxable. So you want to make sure you're always working with a qualified licensed insurance agent that understands how to make sure that your policy will work for you. There are three types of policies that can actually fall into the ability to have cash value tax-free. One is a whole life, one is universal life, and the third is indexed universal life. And again, as long as they have cash value and a death benefit and meet the test of either CVAT or guideline premium, your income is 100% tax-free. Okay, so we always like to try and finish up with a story that we can apply to help you have a better understanding of how all of this might work. You know, over the years, we've had lots of clients who initially, when we share this concept with them, just don't understand the big picture. They just don't understand how this cash value life insurance policy is going to be able to do all of these things we've described. We had a particular client that fit into that mold, and while he didn't completely understand, fortunately, he did trust me, and he was diligent. He made those premiums month after month after month, paid into his policy. He was also a construction owner. In 2008, when the market went belly up, he was at his wit's end. He just didn't know how he was going to be able to keep the doors open and keep his business going. You see, he had actually purchased this business from his father about a decade earlier and was hoping to be able to transition this family business to his son in years to come. Well, the good news was, because he was so diligent with making those premium payments, he had a lot of cash value in that policy. And we were able to take a policy loan against that policy to keep the business afloat, to keep the doors open, to keep his employees employed. Nothing could have made him happier at the time. And of course, when the market came back and he again started to have a very, very successful business, he was able to pay back all of those policy loans. The business is thriving today, and the good news is he actually started to transition that business to his son about a year ago. And so the legacy will live on, all because he trusted me, but because he trusted the cash value life insurance policy and made those premium payments without fail. If you'd like to find out how you might be able to get a cash value life insurance policy and get tax-free withdrawals now or in the future to benefit you, click on the link to apply to become our client. Also, if you like this video, make sure you give it a thumbs up, share it with a friend, and remember, if what you thought to be true turned out not to be, when would you want to know it? Thanks for watching.